Welcome, everybody, to the latest installment of the Orange Wheel podcast, where we support business leaders in understanding the monetary transition. I'm joined here today by Sadiq Jaffer.
Yep, correct, yeah.
Sadiq and I met in Prague at Bitcoin for Corporations Day back in June.
June, that's right.
Yeah, it's a fantastic event put on by the guys in Prague. We had Saylor there, Mallers, other very high-profile folks in the Bitcoin for Corporations space. And Sadiq and I got talking and, found that we had some very, common interests in the space, and thought it would be great to have Sadiq on the podcast. We've been coordinating the last couple months and finally found a time that worked for both of us. So really excited to have you on today.
Thank you. Much appreciated. It's been a bit of a challenge to get our timetables to align. You've obviously been quite busy with various conferences and events, but yeah, it's really cool to have the opportunity to sit down and talk.
Yeah, glad to have you here. So for the audience members who most likely are not familiar with you because you're kind of just getting into the podcasting space today, maybe give a bit of a background about your journey into the world of Bitcoin. What sparked your interest into the applications of Bitcoin into the business arena?
Yeah, sure. So I first encountered Bitcoin back in 2012. A friend of mine showed me the interface for Silk Road, and I looked at some of the things you could buy on the marketplace, and I was like, oh, okay, this doesn't look good. And as a result, I just completely dismissed Bitcoin. I thought, okay, this is something I definitely don't want to get involved with. I want to stay away from this because of what it's associated with. And I forgot about Bitcoin altogether. I mean, I would hear stories about it from time to time, and I just completely ignored it. In 2016, jump forward a few years to 2016, I started getting really interested in the 2008 financial crisis. And I started reading lots and lots about what had gone on behind the scenes, the way the banking system blew up because of the subprime mortgage fiasco. And this really led me down a bit of a rabbit hole. I tend to do that with reading topics. I'll get interested in one surface level topic and I just dive deeper and deeper and deeper into it until I end up in somewhere really random. And I started reading about the financial crisis. That led me into the banking system, the way fractional reserve banking works, how double entry bookkeeping works in the banking system. That eventually led me down the path of understanding the history of gold and the shift away from the gold standard in 1971 with the Nixon shock. And all of a sudden, I started to understand more and more about inflation and monetary debasement. And then all of a sudden, I'm back at Bitcoin. And this was in 2017, just as the price was starting to go parabolic. And I realized, oh, damn, I really should have bought that back in 2012. And so obviously, I did what most people do with cycles. They get involved right at the end of the cycle when there's the big euphoria. I quickly started buying as much Bitcoin as I could in 2017. And then just through the bear market from 2018 onwards, just studied and learned and just got as involved as I could. I think it's quite a standard journey for a lot of people when they get involved in the euphoric stage of the cycle. And then some people just cut their losses and go away through the bear market, and others stick around out of stubbornness and interest and just learn everything they can. And that's exactly what I did through the 2018, 2019 bear market. So yeah, that's how I got into Bitcoin.
Cool. No, I think it's great to have that fortitude to understand. I think, as you mentioned, there's sort of the people that get in on the euphoria and then sell out at the bottom. I think a majority of people are like that simply because they don't have the, I guess, it's my perspective, the understanding of really, to a certain extent, what Bitcoin really is.
Yeah.
And they kind of just see it as this, they get into the speculative hype, and then it's just emotions that kind of take them out. But, for people who are interested in the underlying thesis and the technology and the economic principles at play, they have a higher likelihood of kind of sticking around and building conviction during the bear market.
Yeah, I completely agree with that, because what happened with me is it was coincidental that around the time I suddenly found myself reading about Bitcoin again was around the time that the price was starting to go really, really crazy during the 2017 bull run. So it wasn't just the price that got me interested. It was I did some of the reading beforehand, and I think that's what allowed me to stick around through the bear market. You're quite right. A lot of people, they just see the price appreciation, and that's what draws their interest. Whereas I, just by coincidence, had the two entries at the same time, And that's why I stuck around. And it's become, as it does with many people, it just turns into a complete obsession.
Yeah, yeah, it is interesting. I do think we're a special breed to a certain extent.
Yeah.
There are people who really get obsessed with it, and it's
Yeah,
fun.
yeah, absolutely, yeah. That's why the Bitcoin events where you and I met was so cool, because it's a room full of people that we can just nerd out with, and talk about something that we're genuinely passionate about, something we're absolutely fascinated by. Whereas in the sort of quote unquote normie world, we almost have to dial it back a bit and try not to like just make people run away from us. But in these types of events, you can just kind of open up and talk, and it's fantastic.
Yeah, I think that's a good segue to kind of think, hear more about how you've sort of, to the extent possible, bridged your passion for Bitcoin with your professional career. Maybe explain a bit about.
Yeah, so in my professional career, leading up to 2017, I was very much in the sort of IT support space. I started in IT and tech support, and then moved more into the consulting world, focusing on big infrastructure projects, like big platform projects for some large entities here in the UK. That eventually led down the road of looking at data centers and cloud. And pretty much since 2017, in parallel with my interest in Bitcoin, I've been focused on cloud. And these two interests have been very isolated from each other until quite recently, when I suddenly became very interested in, as AI proliferation increased and energy usage around AI started to become really obvious to everyone, some of the energy concerns. And that's when I started to notice the synergies between the two industries. And I realized that the way Bitcoin mining operations function are very similar to how data center operations function. There are obviously some nuance in the way that energy is consumed, but I realized that they're actually quite complementary to each other. And then as I started to look at AI workloads and the energy consumption profiles of AI workloads, that's when I realized that these two worlds really are converging on each other. And that kind of brought the focus on Bitcoin more into my professional work, rather than it being a sort of isolated interest off on a tangent, so to speak.
Yeah. Yeah, I think in the normie world outside Bitcoin, I mean, Bitcoin is becoming more mainstream.
Yeah, definitely.
But still, I think in the corporate world, I get the sense most business leaders really recognize, okay, AI, this is something I need to pay attention to, need
Yeah.
to focus on. And so many companies that aren't, yet on the Bitcoin bandwagon, they're kind of like, okay, I
Mm.
can't focus on something else because AI is in my radar. But this is kind of interesting way now that I see that Bitcoin kind of piggyback on the AI
Yeah.
interest through, as you've kind of mentioned, the import of the need for compute, the energy
Yeah.
that goes along with that requirement. Very, very cool. So we'll get more to that, I think, in the conversation. But maybe before we dive, double click on this aspect,
Yeah.
maybe it'd be worth hearing about other areas of Bitcoin that are of interest to you at a high level, and then also, your founding of SatScription and what that's all about, and what the vision and strategy is.
Yeah, so as with all Bitcoiners, we have our sort of one or two areas that we're really interested in, and because it's such a huge topic, I mean, other than maybe Adam Back, there's like not very many people that can talk to every different subject in Bitcoin. So we sort of focus on small areas. My real One of my big interest areas is the integration of Bitcoin mining into energy and data centers, and I guess that's one of the topics we're going to focus on today. What the other area that I'm quite interested in is corporate adoption, nation state adoption. These are things that we know are going to happen in the future. How that's happening, the way Saylor, for example, has approached this with the way that he's exploiting capital markets is truly as fascinating. What's happening here in the UK with Smarter Web, for example, that's also amazing. These are areas that I'm interested in. I'm also really interested in Lightning. I think Lightning as a technology is fantastic. I'm quite keen to see what happens with Taproot assets and how stablecoins eventually become prevalent on top of Lightning. So yeah, I've had to. We have to pick and choose our battles, right? And these are the sort of topics that I'm quite focused on.
Yeah, but I think it's good to have people who kind of speak to multiple different aspects of
Yeah,
Bitcoin and how it
yeah,
influences like the real world and corporations and
yeah,
other
yeah,
traditional actors. Because I
yeah,
also kind of like having that kind of holistic view of,
yeah.
how can a company take, look at Bitcoin from a strategic angle in terms
Mm.
of all the different risks and opportunities that might apply to the business.
Yeah.
Of course, the treasury space is, I think, the one that's getting the most attention right now, but it's great to kind of be able to play across those different verticals.
Yeah, so with the mining integration, one of the ways that I've approached this is I rather than talking about Bitcoin mining, I talk about a quote unquote flexible load consumer. And I describe when I'm talking about some of the challenges associated with data centers, I describe the energy consumption profile of Bitcoin mining rather than explicitly calling it Bitcoin mining. And when I do that, people think, oh yeah, that's a really useful product, and we could actually use that integration into our technology. Then I tell them what it is, and people are a little bit taken aback because they're like, really? But yeah, I think it's there's that educational journey that you have to take people on, and that's a way that I've found that really works really well. On the treasury side of things, again, just looking at share price appreciation for companies like Smarter Web in the UK, people see that and they think, okay, right, how have they done this? What's going on? And then you tell them what they're doing under the surface, explain it to them. A lot of people, the term that immediately jumps to mind when you say this to people is Ponzi scheme. But then once you explain it to them, the way they're structuring it, the way it's highly regulated, people get it. So it's a very much an educational journey, as you and I both know.
Yeah, no, I think that's a good analogy in general. Like trying to lead to business people, starting with like the facts and figures and like the characteristics that will draw them in, and be like, okay, that sounds fascinating, and then you
Yeah.
kind of follow with the Bitcoin.
Yeah.
It's
like a bait and switch, right? Yeah.
A little bit. We lead with Bitcoin, definitely. It's surprising to me still, but yeah, it's certainly here in Europe, like people are still very, I don't know what the word is, apprehensive to like at all getting engaged if it's Bitcoin related. And I really, I think it's good. People are going to look back on history and be like, why was that even the case, right? But
Yeah.
it's the way it is.
It's a perception thing. There's been a lot of negative media coverage over the years. I mean, as I mentioned earlier, the association with Silk Road, for example, wasn't exactly the best publicity to begin with, but it did demonstrate its uses in countries, for example, where there's heavy censorship. Again, Bitcoin is proving its worth there. So it is about that educational journey, and sort of leading into one of the next thing I guess we wanted to talk about is what was the purpose behind SatScription and why I created that. So initially, so the first of all, SatScription, where the word comes from, it just actually popped into my head one day. I just thought Satoshi's encryption, SatScription, merged the two together. And the basis behind it was initially I was quite interested in the applications of proof of work to cybersecurity. So a somewhat controversial topic in the space is Jason Lowery's thesis, Soft War, which he published. He's a serving officer in the US Air Force, and via MIT did a research piece on Bitcoin and the application of proof of work to cybersecurity as a form of modern non-kinetic warfare. It was quite a controversial topic in the Bitcoin space because it really divided a lot of people. When I read his thesis, it did occur to me, obviously, that the way the Bitcoin network protects the quote unquote admin function of writing to the ledger using proof of work is a novel way of decentralizing a privileged permission on a network. So from that point of view, you could argue that Larry's thesis is correct, but then the way he positions proof of work as a form of modern warfare, that's where some people really go, maybe I'm not 100% sure about that. But that really piqued my interest in some of the cybersecurity applications of proof of work. And I got really interested in some of the work, another slightly controversial topic, Bitcoin Satoshi's Vision, N-Chain, were doing, because they just at around about the same time, they published a paper on how to build security certificate infrastructure, so public key infrastructure on the Bitcoin network using BSV. They put a paper out on the subject, and that really piqued my interest and said, okay, are there actually applications beyond what the financial ledger, the Bitcoin ledger? What are the non-standard transactions that could be used on top of Bitcoin to do this type of stuff? That's led in quite an interesting direction because I've looked at, and it's something that I will publish through SatScription eventually. What does a modern cybersecurity system look like? where you have the Bitcoin proof of work as the basis of its security. So rather than using standard security permissions, you use proof of work. And that's how I sort of started SatScription with looking at this in mind. But it's eventually it's just turned into an area where I just publish my thoughts on the subject. So whenever something pops into my head, an interesting topic, whether it be on mining, on treasuries, on security, I just end up writing a bunch of articles, adding them to my queue, and say, okay, these will get published eventually. And it's more at the moment, it's more for my own thinking. It's just a way for me to think out loud, as some people are better when they think on paper by a conversation. And my thinking seems to work really well when I talk to people and when I write stuff. So it's really helping me coalesce my thoughts in the space, and also people are interested in it, which is a handy bonus, I guess.
Totally. No, I'm
Yeah.
quite similar in the sense that I like to get writing helps me organize my thoughts and structure my
Yeah,
thinking.
yeah,
And it
yeah.
is pretty cool now. Like I think with the Bitcoin community being so growing and thriving on
Mm.
social media, that you can get people following you and providing feedback, engaging, and
Yeah,
helping sharpen the thinking. So very very
yeah,
cool. I've heard quite a bit about software. Jason Lowry, it's on my to read list. Haven't read it
yeah,
yet, but I've heard
yeah.
quite positive feedback from a
Mm.
wide variety of folks. So I'd like to kind of dive deeper into that at some point. And then I don't know nothing about BSV.
Okay.
I guess Craig Wright has been involved, and I think that's
Yeah, fake Toshi was involved, so yeah, that's but it's one thing that Nchain have done really well is they've focused on some of the cybersecurity applications of Bitcoin, and that's why I'm quite interested. I'm interested in what they're doing, but obviously, if these applications that they're building do work really well, the security of the Bitcoin network, the main Bitcoin network, is just unparalleled. So it'll be better to build these type of solutions here instead.
yeah. Yeah, I suppose so. I think that's an interesting. Tim Draper has this perspective, and I tend to agree. I think at a high level with it that like different chains, and let's say hard forks of Bitcoin, but also
Mm.
other layer ones. There's room for experimentation, and then over time, the stuff that really works well will probably get
Yeah,
built as a layer 2, 3, 4 on Bitcoin.
yeah.
At least the things that make sense to be built on Bitcoin will likely.
Yeah, I think so. I mean, with the current climate, with what's happening with op return and Core V30, for example, I think a lot of people are saying no. Don't build things quickly and break things. Just move very slowly, be very conservative, and just change things very, very slowly. Some people make the argument that we shouldn't be changing Bitcoin at all. It should be pure bug fixes, and I'm kind of somewhere in the middle, I guess. I guess we'll see over time how that situation evolves as well.
Yeah, I certainly see like the, let's say, ossification of the layer
Yeah,
one as being probably a feature more so than a bug.
yeah,
But again, I'm not too deep into
yeah,
the technical aspects of it. Okay, so
yeah,
let's start diving a bit deeper into the Bitcoin mining integration
mm,
of Bitcoin mining into electrical infrastructure. Um, so in some of your writings on SatScription, you've talked about this concept of how distributed Bitcoin mining can act as a virtual power plant or a
yeah,
VPP. Can you maybe
yeah.
elaborate a bit more on what this concept is?
Yeah, so a virtual power plant is it's a construct where you consider all of your energy resources as distributed energy resources, so DERs, and then the goal of the virtual power plant is to balance production and consumption in a way that makes the system as efficient as possible. So if we were to think of a very basic one input, one output system, it would be how do you balance the energy that is produced versus the energy that's taken out. So if you have a single generator that's producing energy and a single Bitcoin miner that's consuming that energy, the way that you would balance that is by effectively just tuning the two so that they're completely in sync with each other. Where this becomes quite interesting is where you have multiple consumers, multiple producers, and you have to aggregate them. So, for example, in a Bitcoin mining operation, a Bitcoin mining data center, they would be potentially aggregating all of their mining pools and different hardware that they're running, which will have different consumption profiles. And then they would be balancing that against the energy that they're getting from the grid. So that's how it applies to Bitcoin. But obviously, this concept applies to energy consumers as a whole, and Bitcoin mining is just one example of a virtual power plant.
And so it's not so much that the Bitcoin mining itself is, when I think of power plant, I think of like generation, but in this concept is a bit more of a systems aspect with generation, consumption, kind of
Exactly, yeah.
integrated together.
Yeah. So the term that's thrown around when you talk about power plants is prosumers, so producers and consumers together, and that's the whole concept of the VPP is how do you integrate consumers and producers together so that they perfectly balance each other? How do you make your system as efficient as possible? That does obviously require some clever orchestration on top of the various components that you're building, but yeah, that's how the VPP works.
And then I guess like maybe elaborate a bit more on the reason they need to kind of be balanced is because in the case that there is imbalances, then that leads to things like curtailment or inefficiencies in different kind of manifestations. But maybe elaborate on.
Yeah, so this is where one of the areas that has been looked at in in quite a lot of detail in the Bitcoin industry is the some of the challenges inside of the renewable industry. So where fossil fuels or nuclear or something like that is very stable with its energy production, renewables tend to be very spiky. So if you have, let's consider wind generation, for example. If there's no wind, you're not producing any energy, right? So how do you manage against that? Again, same with solar. If there's no sunshine, if there's cloud coverage, you're not producing any energy. And the problem is that's fine if you're just at a very sort of residual level time, but now you're getting these huge spikes in production where you've got this energy that's being produced and you have to do something with it. The challenge was always, okay, how do you have sufficient battery capacity to store this energy if there's no demand from the grid? Because the energy grid doesn't really store energy. It just kind of moves it from one location to another. And there's very clever systems around how that's balanced. So there's very clever demand forecasting in the grid saying, okay, this is how much energy we're going to need at this time, and how the producers then need to make sure they are producing that level of energy. With renewables, that level of control doesn't exist. Or the issue has always been, how do you manage demand side response rather than supply side response? Demand side response was, okay, do we have the ability to tune the workloads that are consuming the energy? That was always a challenge. So the solution was always supply side response, which is curtailment. And then when you go into curtailment, you have essentially lost potential for the energy producers. This is energy that they could produce, they could monetize, but they don't have a buyer. So instead, they have to go through these expensive curtailment procedures to cut their production down. When the energy consumption profile of Bitcoin mining became obvious to a lot of people and how tunable it was, how interruptible and how tunable it was, people started to realize that, okay, this is maybe potentially the solution that we need to balance against these curtailment events. And that's something that I'm looking into in quite a lot of detail right now.
Yeah, very cool. Yeah, it seems, again, as not an electrical engineer, having taken a little bit of electrical engineering stuff in my university days, I think I understand some of the basic principles at play, but it does seem just intuitively, from an economic standpoint, somewhat of a no-brainer. I suppose, when you bring it, you mentioned that, wind and solar, they produce more than the grid can handle. It's curtailing, and that's totally lost potential return on the capital invested. So maybe it'd be good to understand, what are the, technical and operational barriers that are kind of preventing Bitcoin mining from really being integrated into these renewable energy infrastructure projects.
So the biggest challenge is from a technical point of view, the from a technical point of view, the challenge is, okay, right, we need to get the Bitcoin mining rigs into the location where the energy is generated. Energy loss through transmission lines is quite high, and then the cost of producing those lines is also quite high. If you now are in a situation where you have to distribute that energy over huge resources before you can get it to the miners, there'll be there's a break-even point, which is the maximum distance you can go to before it becomes no longer is profitable. If you can shorten that distance and actually integrate the miners into the energy location itself, this is hugely advantageous. So this is where the term behind the meter comes from, where you're actually integrating the energy consumers on site with the producers, and it's not going through a metered connection out onto the grid. All that's going out onto the grid is the energy which is actually required by the grid, as opposed to everything else which is being consumed on site The technical challenges coming into that is how do you safely and securely integrate these systems into the energy systems? How do you control the number of Bitcoin miners that are operating, the frequency at which the ASICs are operating, to make sure that you're perfectly balanced with the energy that's being produced. And there's many systems that do this now. There's many, because this is actually quite a Bitcoin mining is a very mature industry now. There are many operators that build systems specifically for this. So it is quite mature. It's just more, again, a bit of an educational thing about talking to the renewable producers, explaining these technical concepts and explaining the technology that's available to help them solve this problem. So it comes back to an educational thing rather than a technical challenge. It's more of an educational challenge again.
Yeah, that makes a lot of sense. And what I've heard from other folks, and I don't know the extent to which this applies in the UK or continental Europe, but in Western Canada, there is also kind of a regulatory hurdle. From what I understand, third parties can't be behind the meter, as you said. So then it needs to be the kind of operator of the generation plant that also needs to be the one that owns and operates the mining equipment. And that tends to be also something they don't want to do, is they don't feel comfortable moving into a new business line, so to speak. Do you know if that is also a challenge in the UK?
Yeah, it is a challenge in the UK. So speaking to your example in Canada, what the miners would have to do is obviously buy and run all the equipment themselves. Then the challenge becomes, okay, now are we custodying the Bitcoin ourselves? What are we doing here? In the UK, we've got a similar challenge whereby only certain types of energy consumers are allowed to integrate behind the meter. There's what's known as private wire regulations, where only certain types of private wires are allowed at renewable sites. And so it's a bit of a regulatory minefield, and it's something that I'm looking into to understand what is and isn't possible. Where this becomes quite interesting is using some of the financial derivatives that are available with Bitcoin. So, for example, things like hash price and hash rate derivatives. These products actually help solve some of these issues, because now if, for example, a renewable operator were to integrate Bitcoin mining behind the meter, they don't have to custody the Bitcoin. They can effectively just sell the hash rate that they're producing via hash price, and therefore someone else, as long as they've got a buyer for the hash rate they're producing via the hash price futures markets, the Bitcoin that's generated goes to someone else. It's the products, for example, the Luxor marketplace. This is a godsend for this particular problem. I don't know whether the guys at Luxor designed their products with this specific scenario in mind, but it appears to be a godsend to try and fix this issue.
Very interesting. No, it's the first time I've heard about that, but I guess there's, so basically like let me just play it back. The generation company will still have to kind of own and operate the hardware equipment, but they are selling the hash rate to a customer or through a marketplace. That then that person pays them in whatever fiat, and then they
receive the Bitcoin.
Okay.
So that's one of the options that's available. The other option that's available to get around some of the regulatory challenges associated with this is whereby the renewable energy operator effectively sells floor space to the mining operator. And in that scenario, and this I think is going to be the most palatable scenario for a lot of energy producers, whereby what they're saying is, okay, we're going to sell you this amount of energy. We're going to sell you some space within our installation to run your equipment. As long as you don't break any laws with the energy that we're giving you, it's up to you what you want to do with it. And then any outputs that you produce is yours entirely. That type of separation, that type of firewalling between the energy producers and the Bitcoin miners is going to alleviate a lot of the risk concerns for energy producers, because as you can imagine, energy is a highly regulated industry. So everyone's going to be extremely risk averse with taking this type of approach.
Yeah, it certainly sense quite a bit of risk aversion from large energy companies. The one, and I think that's part of the reason for the very slower than anticipated adoption. At the same time, I sort of see synergies too that are quite obvious. Like, you already have your operators on site. It seems like it's not that much different of a new skill set to then also operate the rig equipment. If anything, it's probably quite a bit simpler than most of the more complex equipment in some of these generation sites. So, the operators are already there. The capabilities are very similar, I think, right? So it does, I think, come down to the economic risk, getting into something that is quite different risk return profile, I think, than what they're used to in their, again, highly regulated industry with very, let's say, low risk, low return economics.
Yeah.
So then I think, do you think the natural owners of because also, there's also a question in my head, like, who are the natural owners for the risk return profile? Is it the kind of companies that are exclusively doing Bitcoin mining? Will it become more like the companies that are, if it's not the generation companies, then, to what extent is it also AI data center operators that then kind of expand more into Bitcoin? Or is it going to be kind of a mix of all of the above? I mean,
yeah, I see what you mean. So I think, again, this comes to the question of what is the energy consumption profile of the optimum integrator into the renewable site? And because of the, again, you can't control the supply side response from the energy producers, because if it's a renewable, you're totally dependent on what's going on with regards to weather conditions. So there's zero supply side control available to you other than curtailing, which you don't want to do. Everything has to come from demand side response. So if you now think, okay, we know what the energy profile looks like of what the producers are outputting. What is the optimum consumption profile that's required to monetize this energy? And ultimately, what you need is something that is latency insensitive, so something that can deal with high latency, doesn't need super fast internet connection, but something that is compute intensive. And the two items that come to mind are obviously Bitcoin mining, because it's very compute intensive. The SHA-256 ASICs are very compute intensive. They can consume a lot of energy. They're highly interruptible, so we can switch them off as and when they're needed. So the demand side response can be perfectly aligned to what's happening on the supply side. But where this also gets quite interesting is when you start to look at AI workloads, because, for example, and again, just to take a slight step back and talk a little bit about AI profiling, within AI workloads, there are generally two modes that the model is run in. It's either training mode or inference mode. Training mode is when the model is training, so forward and backward passes through the data. Energy consumption is highly consistent and stable. There's no real latency concerns, because the model is training, no one's really interacting with it, but the energy consumption is very high and it just can't be interrupted. When you're running a request to a model, so for example, when you send a request through to ChatGPT, what you're actually doing is inferencing against the model. Here you have an insensitivity to latency, because when you send a request through to ChatGPT, even if it has to think for a while before it generates its response, you're okay with that because it's a detailed search. But what also happens is because of that insensitive, because it's insensitive to latency, but it is compute intensive, it's actually quite similar to the energy consumption of Bitcoin mining. And there was a really interesting piece of research that came out from Goldman Sachs recently, where they actually spoke about this. They said, well, hang on, what is happening here with the way AI models are being used is a potential solution for some of the grid imbalancing issues that we have. Because if you have compute infrastructure at a location where there's renewable energy production, what you effectively can create now is a distributed virtual power plant across multiple sites, where when you need to run a request against a model, what you can do is actually look to see, okay, which one of my sites currently has energy capacity? Where am I best suited to divert this request? And then you're essentially now orchestrating your AI request to various locations globally, wherever there's capacity available. Again, there are some niche players in the market that are now starting to do this with some very, very clever systems. But this, when someone like Goldman Sachs comes out and talks about this, people really pay attention. So it's really cool that some of the really big players are starting to pick up on this as well.
Yeah, and I suppose that's something where the more optionality there is, the more sites, the better becomes optimized. There might be a limit there somewhere where it kind of
because it's a balance of is the energy available at that location abundant enough? Is it available at a price point which is profitable? Because obviously you have to balance against the capex requirements of actually deploying the infrastructure in that location. So in exactly the same way as when people are looking at data center builds, the construction companies that build data centers, they'll do cost analysis on whether a site is profitable with the energy that's available in that location and the price point it's available. I think you're going to see this model and this calculation evolve two-factor for Bitcoin mining and AI load balancing as a component of that. So the standard data center model where your compute is just running all the time, that model is kind of legacy now, and you need to now take into account, okay, if you're integrating Bitcoin mining, if you're integrating AI bursting, AI burstable workloads, how do you factor for these in your modeling to determine whether a site is profitable or not? So I think this is what you're going to see.
Yeah, very cool. Very cool. I guess I have a question. I'll come back to it, which is like really ultimately about the economics between Bitcoin mining versus AI versus them together. But first, I guess what also, from what I understand, you tell me if this is right or wrong, right? Because I'm kind of a bit of a noob at this space. But from what I understand is like the chips themselves, the GPUs, like they have a lifespan in terms of like how much compute they can kind of run through before they are kind of like toast. And I guess that changes the economics because I guess
refresh cycles,
back in the day, it would just be like, let's just run 100% regardless of the economics because we just want to like get the return on capital as fast as possible, right? But because they have a finite amount of like computations they can do before they die, I guess then you become more selective about running them when they're more optimal as opposed to just full on until they die, right? I guess that kind of
yeah, absolutely. So formerly there was the concept of known as GPU burn, which is when you would just cycle your GPU with just random data, like almost preamble data, just to use energy that was available, and you had to do something with it. GPU farms have become a lot more efficient with the way they scale voltages across GPUs and how they adjust the clock frequencies on them to factor for lower intensity workloads. There's no point running your GPUs at full tilt unless you have, full compute loads going through them. So as people start to do this, it's increasing the life cycle of the GPUs, which is obviously then having an impact on the capex and the refresh costs. But again, in order to do this, you're now creating massive energy fluctuations inside your data center. And what was really interesting is Mara came out recently and spoke about how they've integrated AI workloads and Bitcoin mining to mitigate against this. What they've said is that we recognize that in order for GPUs to be used in an efficient way as possible, we need to cycle them very carefully and bring them up and down as and when there's work available for them. While this creates compute efficiency with the way that the chips are used, this creates a massive energy stabilization problem in the data center. And the way that they're mitigating against that is using Bitcoin mining, so that one offsets the other. So if you imagine this is your energy consumption level, as your AI workload spikes and your GPUs come online, the Bitcoin scales down. And then as your GPU load goes down, your Bitcoin mining goes up. And the two are just perfectly oscillating with each other to create as smooth an output as possible. And this is actually a great example of a virtual power plant in action, because what you now have is energy resources with different consumption profiles, which are being orchestrated in a way to balance against each other. And as a result, you're smoothing your output. If you now were to integrate, and I'm sure Mara have done this, I don't know the details of what's going on inside their data center, even though I'd love to know. There's probably some type of battery or supercapacitor storage in there as well, which is then being used to smooth the output even more. So where there is a slight mismatch between what the GPUs are doing and the miners are doing, your batteries or your supercaps will step in and just either be in charge mode or discharge mode to just stabilize your output completely. This is a fantastic example of a distributed virtual power plant in action. And if you expand this concept over large distances, you now have a distributed virtual power plant. So it's really cool to see the real world applications of some of the stuff I'm talking about.
Yeah, no, very cool. And I think that helped to crystallize in my mind exactly how these two play together now, right? I could intuitively see how these things would synergize. Now it's becoming very clear in terms of what makes sense. And now I kind of also seen the news. Many Bitcoin mining companies are now kind of like transforming into AI/Bitcoin mining businesses. I think TeraWolf is one I've seen. For mining, you mentioned Mara as well. So do you foresee that over the coming years that basically every Bitcoin mining company will effectively also be a hybrid, let's say?
I think so. Yeah. I mean, it's something I theorized about a while ago, where I I called it a sort of hybrid compute campus. So I couldn't think of a better terminal, better word for it. So, where you've got SHA-256 hashing running in parallel with GPUs. This does create an interesting challenge though, because you now have two very different price points for profitability. You have your GPUs, which are profitable almost up to 30 cents per kilowatt hour, but your Bitcoin mining, which is only profitable at about 5 cents per kilowatt hour. So you've got the price mismatched considerations to take into account.
Mm.
You also have the double spend on hardware potentially, where you're now buying GPUs and general purpose compute for your data center operations, but you're now also running Bitcoin mining ASICs. So there's going to be some very careful calculations that need to be done on these sites to determine, okay, it's a yes, we can monetize our energy in the most efficient way possible by doing this, but does the upside of, bless you, does the upside of that efficiency warrant the additional spend that's required in capex? And this is one of the areas that I really want to talk to data center operators and say, well, hang on, okay, yes, this is a construct you can apply, but based on all the other metrics, your input costs, your cost of actually running the DC, is this viable for you? Because if it's not, then why would you do it?
Yeah, and again, I think although intuitively it seems to make sense, I guess it wouldn't necessarily in every case. There's probably certain cases where it does, and others where it might not, based on, as you said, the electricity price and so forth. So I think such a model, I think, would be quite valuable if it doesn't yet exist. Kind of looking at these integrated, and what I've kind of come in some of the discussions I've had with some of our clients who are, they might have a source of energy where like natural gas that's stranded, for example, and then they want to look at the economics of developing a power generator. And I guess, as you take more of the complexity of the value chain in, like the model itself becomes more complicated, but also more valuable in understanding. And I think the other layer here that I think is kind of interesting. So you have the economics of the energy source, the power generation, the applications in mining and AI compute. And then I think another layer, which is fascinating, is if you are also the person who, the Bitcoin itself, let's put it that way, right? Yeah. So the derivatives of like, using that to sell the hash rate. But then also the extent to which you want to kind of do the carry trade with the Bitcoin, if you want to actually sell it as a product or hold it and use debt financing to kind of cover your OPEX and CAPEX. So there's interesting layers.
There's so many layers to this, and it really depends on, again, this comes to the risk profile of let's say, for example, an energy producer wants to become, let's say, hypothetical scenario where an energy producer and a data center operator were to merge. They're going to create a new entity which they're going to treat as a virtual power plant where they're going to integrate all of these resources. Based on regulatory alignment with their jurisdiction and their own individual risk profile as mandated by their board, they're going to be positioned somewhere on the spectrum that you've just described. And depending on where they are on that spectrum, that's going to create different technical challenges, that's going to create different regulatory hurdles, that's going to create different financial incentives. And this, again, it all comes back to where on that spectrum do they want to sit? How do they see the vision of their own company from a risk point of view, from an innovation point of view, from an optimization point of view? And each company will have its own sweet spot, and then you have to address all of the technical and operational challenges around it.
Very cool. No, I think it's a very fascinating space as it's emerging right now, and opportunities for companies to kind of rethink what their value propositions are, I suppose, and also opportunities to kind of improve ultimately the economics, regardless of where they decide to sit on that risk return profile. So I think it's very, very fascinating. Cool.
Just to expand on the economics component slightly, here in the UK, there's incentive structures for renewable operators, renewable producers, which this is something that we have to consider because, I mean, it's not just in the UK. Globally, renewable operators and renewable generators are typically given some type of government incentive or government subsidy to operate. And what we have to do is say, okay, well, based on these subsidies that you have, what's the optimum way for you to run your operations? Here in the UK, energy producers effectively have receive incentives based on the renewable energy that they output, not on the maximum capacity they can produce. So if they are in a curtailment event because of low demand from the grid, they're not only losing out on the the sale of the energy, they're losing out on the incentives as well. So
Mm.
a curtailment event for an energy operator is a double downside effectively. Whereas if you now integrate Bitcoin mining, you can now effectively create the double upside, because if you've got behind the meter Bitcoin mining or any type of VPP integration behind the meter, where you're monetizing all of your energy, where you can run your energy production at full tilt, at maximum output all the time, because you know you've got that consumer there that will take everything. When the price signal from the grid goes above a price point at which, let's say the Bitcoin miner is consuming, the miners will actually shut down their equipment, allow that capacity to go through to the grid. The energy operator is now selling at a higher price point to the grid. And because they're now selling all of the available capacity at the grid at that price point, they're now receiving the incentives from the governments as well. So by just doing this one integration, you turn something which is a double negative into a double positive. So it's quite. And then when you talk to regulatory experts around this, they're like, oh yeah, we really should be doing this.
Yeah, very cool. And so hopefully, I mean, I think these kind of case examples, I think, are like the positive economic outcomes need to be, I guess, shared more broadly with regulators, with governments, so that they can kind of set up the right environment so that companies can indeed kind of apply this in a more widespread manner, which should be beneficial for the Bitcoin network, for the economics of these things, for better build outs of renewable energy. I mean, there's so many benefits to it, right? And it's just a shame there's still such a negative perception with many of these.
Again, it comes back to education. We need to take execs, risk execs especially, just on the educational journey. If you were to talk to technical people, if you were to talk to people in the energy industry that understand consumption profiles, that understand curtailment challenges, they get it. They immediately get it. But it's the risk execs, the risk partners for these organizations that we need to take on the educational journey.
Yeah, that's great. And I mean, is this something, taking this educational information to the relevant business leaders, risk officers, CFOs, and so forth? I mean, is this something that you are embarking on in your current endeavors?
Yeah, it's something that I do want to go towards. There's a few more series that I have to publish via my Substack page, which cover many of. So we've skimmed the surface of many topics today. I think each one of the sort of topics we've skimmed over is almost a deep dive that I need to get out there. And once I've got the full set of all the various topics that kind of build up this whole area, I would like to start talking to people about this and say that this is something you need to think about. It was really cool here in the UK. You've got the Bitcoin Policy UK team that are doing this to some extent. That are doing this already. They're getting out there. They're talking to government officials. They're talking to energy producers. They're explaining this concept. So yeah, I'm just kind of following on with some of the work they're already doing, which is really cool.
Yeah, really impressive what Freddie knew and
Susie. Susie and Freddie. Yeah,
they're doing really, really great work. And I'm working also with some folks that are trying to do something similar here in Denmark. I mean, just starting from zero right now, but really taking inspiration and getting guidance from BP UK. So really great work with that team there. So before we kind of sign off, Sadiq, maybe be great to kind of understand, besides, you kind of mentioned where you kind of want to go with this, but like any other aspects we didn't really cover, any other kind of goals you have for the future, and lastly, how can people get in touch with you if they want to learn more and get in touch directly?
So my goals for the future are somewhat selfish, actually. It's more my own interest. So getting this content out there is something that I'm really quite interested in anyway. It's topics that I'm genuinely fascinated by. It's problems that I'm thinking, okay, how can I potentially solve this issue? So it's just fulfilling my own curiosity and just getting the content out there. The fact that people like yourself want to come and talk to me about it and people are quite interested in what I'm doing is almost a bonus. So I'm really happy about that. I think moving forward, again, there's a few areas some of the areas that I mentioned at the start of our discussion that I'd like to quite lean into and see where those go. So the applications of proof of work to cybersecurity and the development of stablecoins on top of Lightning. Somewhat controversial topic is what a potential algorithmic stablecoin on top of Lightning would look like.
Terra Luna, oh my God, Terra Luna.
No, but backed by Bitcoin, obviously, right? So yeah, not just complete vaporware, but so a Bitcoin-backed stablecoin is something that really fascinates me. And I think the way Taproot is developing, well, Taproot Assets is developing, this is something that I think is going to happen at some point. The challenge is going to be is how is that structured? What's quite interesting, I know we briefly mentioned Freddie from BP UK, his recent venture that's just launched, BHODL. What's really fascinating is they're actually a Bitcoin treasury company that's looking to deploy the Bitcoin they hold on balance into Lightning. And act as a Lightning liquidity provider with a view to generate fees from there. So that's really interesting to see. That was a question that I put to Saylor when I met him in Prague, and I said, when is MicroStrategy going to deploy its Bitcoin into Lightning and act as a liquidity provider? But it's nice to see that treasury companies are doing that. It's nice to see Lightning is becoming an area of focus. So that's going to be another area that I'm going to look into as well.
I mean, Saylor, I'm curious to hear what his answer is, but it sounds like he's very much not like Bitcoin is a mean of exchange. It's not really on his radar. He doesn't seem to care.
No, it's not. He's very much focused on it from a store of value point of view as an alternative to bonds, how to build capital structures and capital stacks on top of Bitcoin. He's very much interested in how you create Bitcoin-backed securities. It's fascinating what he's doing. And just a quick plug to my own content. There's an entire series I've written on MicroStrategy as a case study, looking at all of the various products which I'll be releasing over the next month or so.
Super excited to kind of see that. So needless to say, Saylor didn't really have any plan to.
No. I mean, and even if he did, he'd be keeping his cards very close to his chest. He's a CEO of a highly regulated public entity. He has to be very careful about what he says in public. So a lot of the time, people will put questions to him and he will give a very diplomatic answer, which is what he's essentially allowed to say. But I'd love to know what's going on behind the scenes at strategy. Yeah.
Okay, lastly, we'll put it in the description for those viewers who want to get in touch, but maybe just quickly mention kind of which platforms to get you on, where to find SatScription, any other contact information.
So I publish, most of my content is either published via Substack or my LinkedIn page. On my LinkedIn page, I tend to do more sort of higher level articles, more focused at some of the sort of the corporate world, whereas some of my technical deep dives I tend to put out via Substack. But if you were to find me on X with the handle SatScription, you'll get all of the content as it's released.
Fantastic. Okay. All right, Sadiq, it's been a fantastic discussion. Glad we had it. Looking forward to hopefully meeting you in person in November again, whether it be in Prague or Amsterdam or both.
Okay. Hopefully both. Yeah.
And wish you the best of luck taking SatScription to the next level. Sounds very cool.
Appreciate it. Thanks very much. Really enjoyed the conversation. Thanks, Ted.